Hello and welcome. Today we're working on how to calculate the Bitcoin risk and return and the stock market risk and return, and we'll compare those and see how well you've done over the last 7 years. So let's get started. Hello, my name's Jeff from Finally Learn, where I help you finally learn financial literacy. So we go to Yahoo Finance, and if you type in BTC, that's the symbol for Bitcoin, and you'll see we have the current price, the $46,000 current price, historical data. And if you look at historical data, you can do it for daily prices, historical prices, and the maximum time is September 2014 to March 2022. Now, I want to do it exactly for a year, so I did it March 31st, 2015 to March 31st, 2022. You can hit apply and then hit download, and that puts all that data into a spreadsheet. You can open it up in Excel. You can do the same thing for the S&P 500 fund called VOO. This is one S&P 500 fund from Vanguard. There's many others from different companies. But this would track and follow the S&P 500, which is the 500 largest U.S. companies. So it is a large company index in the United States. So it is a huge index. So you can do the same thing, historical data, and you can download the last 5 years or max or whatever. We need the same March 31st, 2015. You can apply and then download. So what if you download? Let's go and show what we'd have for Bitcoin. Here's all the information we have. We have it for 200 and something days. All we need is the adjusted close, and we do the same thing for VOO, which is the S&P 500 index fund, and we need the adjusted close. So here's what I've done. I've set this up. I grabbed the dates and I grabbed the Bitcoin price. Now, what I want to do is show you how we calculate the return and the growth of like $1,000, and then we can calculate some risk measures like standard deviation. And I've already done it for the S&P 500, so I'm going to show you how to do it for Bitcoin. You can easily do it for the S&P 500 or for another stock or another index fund or exchange traded fund. You can do it, you can build your own, and then we can compare. We'll do a summary at the very end. Okay, so let's get started. What we're going to do is figure out if you invested $1,000 on March 31st, 2015, and then it started going up and down because the price fluctuated. So let's calculate the first day return. We'll take the 247 divided by the 244, and then subtract out 1. So our return is something like 1.2, almost 5%. And we can copy that all the way down. And so we have daily returns. Let's do the growth of $1,000. So we start with 1,000, so equals 1,000 times, I'm going to build a parentheses here, 1 plus 1.24 here percent. So if it goes up about 1.24%, then you'll have another $12.48. Let's do it one more time, and then we'll copy it all the way down. So $1,012 times, start the parentheses, 1 plus 2.32% basically, and we'll close the parentheses. And so then that $1,000 investment that you have made has grown $12 and then up to 35 extra dollars. So let's double click all the way down, and so therefore we have the return for 7 years, and let's see what it is all the way down. So that $1,000 investment got to be $186,000. That's fantastic. So what a great return. Now, there is a lot of risk with Bitcoin, and we know that, so let's quantify that. The way we do that generally is using a measure called standard deviation. So we need to do this calculation, standard deviation. We'll do the years, returns, things like that. All right, so what we can do is, I'm going to do a couple little tricks in Excel. So I'm going to highlight all the returns because I'm going to use this. I'm going to call this BTC, so I'm going to just type in BTC. Okay, so there we go. So anytime we access BTC, it's going to show that entire column. All right, so we're going to get the standard deviation, For the daily returns, okay, I'm going to type in STD, and you'll see it auto suggests several things. So let's do it based on the sample size. And I need to type in BTC because that's my named range. I could just highlight that entire range, but I've already named it, so I can just use that. So my standard deviation is about 3.85% daily. To get the variance, I need to take the standard deviation and square it. So standard deviation to the square root, to the second power, that's squaring it. So 0.14, almost 0.15%. Now, how many trading days are there in a year? Well, Bitcoin trades every day, so we have 365, plus we have a couple of leap years, so let's do 365.25 to make our math work out a little bit better. So we're going to calculate the 365 days times the 0.1482%, and so our annualized variance becomes 54%. Okay, now we want to take that and calculate the standard deviation. So these are the two numbers we're really going to pay attention to. This is just kind of helper information, so it works out. We need to take the square root. So square root is a function in Excel. Square root of the 54%. So what is the standard deviation, which is how we measure risk, basically, on investments. So for Bitcoin, the standard deviation is about 73.5%, which is a high risk because it goes up and down a good bit. So this is high risk. We'll compare it to the S&P 500, which is a proxy for the stock market. Okay, let's do this. Now, I already have the number, all the returns labeled as a named range. So let's do a count. How many days are we talking about? I don't want to count all the days or have to, run through it. So count BTC. How many days of returns do we have? And we've got 2557. So 2557. If we take the 2557 divided by the 365 and a quarter days, then we get right at 7 years. So I've got 7 years returns. I've just made sure I've got 7 years of returns. So we can calculate the annual return now over 7 years, and we can calculate each individual annual return. Okay, so let's do this. The other thing I want to do is let's highlight the date and the Bitcoin price. I'm going to highlight all that. And so I'm going to name that BTC price. So BTC price for Bitcoin price. So let's do a little Vlookup and look at the date, and we'll pull the price and we figure out the annual return, and we can finish this up and figure out what are the risk and returns of owning Bitcoin, real data for the last 7 years. All right, we're going to use a function called Vlookup, which is vertical lookup. The lookup value is going to be the date, and then I'm going to pull the price on that date. All right, for Bitcoin, our table array is BTC price. Do you see how it gives us the price here, and it gives you those two columns? I want to look in the first column, the date. The second column is where we're going to return. So second is the 2 is the column. I'm going to leave it blank here because we're going to just pull the closest value to March 31st. So it is indeed 244, and let's copy this down. And so on March 31st, which was yesterday when I'm doing this video, 45,538. So these numbers look correct based on our data set. All right, so let's calculate our annual returns here. Now, we can't do it for the year 15. We can do it for the year ended March 31st, 2016. So here's what we're going to do. We're going to take the 416 divided by the 244 and then simply subtract out the 1. So we got a 70% return for the year ended if you counted the year end as of March 31st. And let's copy this down. So you see we have some years have fantastic returns, went way up, some 41% loss, 22% loss for the year ended March 31st here in 2022. To get the annual return, we're going to use a RRI function. So let's look it up here. So RRI is going to be, I need the number of periods, which is 7. I need the present value, which is 1,000, the very beginning value. And the final value, we need it to be at the very end down here. So 186,000. So what we have is, we have 111% is the annual rate of return over the past 7 years through March 31st, 2022. So fantastic returns, but a lot of risk. Okay. Now I've already done this for the stock market, S&P 500, the VOO. I just had that same price data. I calculated the return, the growth of $1,000. And so what we have is it grows to at 13.99%, and the standard deviation is 18.2. So what is our total return? We got 2,500. We started with 1,000. We have 2,500, which is a good return. It's a stock market return. All right, here's the summary. So Bitcoin has been higher return than the S&P 500, but a much higher standard deviation. And so you look at the annual returns. This, even with these big losses, your $1,000 would have grown to $186,000. Your $1,000 in the stock market would have gone to $2,500. So risk and return are pretty correlated. So you see you have some people are really scared about the stock market being a risky place, and Bitcoin is even more risky. So 18, so it's 4 times more risky, or 3.5 times more risky to be in the Bitcoin for the last 7 years than it was in the stock market. Hey, we'll see you on the next video. Thanks for watching.